Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Dick on today's show. A couple of ratings are sort of leading the charge here this morning. Tesla upgrade at Guggenheim, EA upgrade at Bank of America, NVIDIA downgrade at Bernstein. So we'll talk about those. We have a couple of earnings that are of interest as well. And we'll take your questions from our chat, as always, both on YouTube and premarket.benzinga.com. Today's guest at 8:35 will be joined by Ian Weiner, formerly of Wedbush Securities. We'll talk about where he's at right now, his new firm, and what is on his mind as far as the markets are concerned. Joel, what happened here in the overnight session?
Oh, green on the screen. We followed through. We had a strong close on Friday, especially those closing 15 minutes. Pre-market high, 21.50. Not seeing much until you get up to 27.30, folks. You have Thursday's high, and you have your 4 and 5 day closes. We'll make 27.31 a 4-star, a big level on the upside. Coming back on the downside, a little support here at mid-range, 27.11. Like to see the close, though, at 27.06 and a quarter. Real good support down there as well. Crude's in the red by 33 cents here at 52.39. Has not been under $52 since we had a low on February 29th at 51.84. Keep an eye on that, as the current low is 51.82. Gold in the red by 920, struggling to stay above 1,300. That last print in the gold market was 1309.30. Just hanging on. We haven't been under 1,300. Haven't traded under 1,300 since, let's say, February, or not February, since January 24th. You had a 12.85.10 low. Silver hanging out down a dime, 15.70 here, and coming into a busy earnings week this week, not the big guns, but just in pure numbers. We got a lot of stocks that are coming out with earnings, Dennis. What are your expectations, high or low?
Oh, I don't know. It doesn't matter. They just buy them no matter what, don't they? Because when they get hit, we've been talking about this, they seem to buy the dip, and if they rally them, they rally them. So it seems like they win heads, the market wins, tails, the market wins. So I don't know. I got my full bull hat on. I need to get a hat too, because this hair is getting out of control. I tell you that. I actually, here for everyone, I've actually got a hair. I'm going to get my hair cut today. So I'm actually going to go and get my hair cut today, because the hair is actually, when it's coming down, it's like getting in my eyes almost now. Never had the mop so long. So everybody, you don't have to worry. You don't have to look at this mop on my head for much longer. Tomorrow, I will have a nice, clean haircut just for you guys.
Great clips? Do they have great clips?
No, I got my buddy. My buddy owns my buddy's got his own hair salon. So
does it have the red thing, the red and white thing out in front? You know, the like the old that's what you go to, right?
Yeah, the old barber shop where it's they give you a nice little, they'll give you the shave with the straight razor. We do it old school.
Okay. All right. Well, you were talking about buy the dip, and I think maybe buy the dip of the year. We got to go back and cover EA here a little bit. Drop on the earnings report. I'm just seeing 3 big candles here. Upgrade from Bank of America today. This has got to be one of the toughest stocks to be trading. Dennis, give us your take on EA.
I own it in the long-term portfolio. I wish I would have added to it on the earnings miss, but everybody was just destroying it. Like, everybody hated on it. Even Pactor came out, who we're going to try to get on next week, and said they deserved to get destroyed on that earnings report. But then they launched that game, and it's the Apex Legends, however you say it. And it's competing directly with Fortnite's same business model, basically. The free-to-play, everybody gets involved. And people are seeing it as potentially the next Fortnite. So it's amazing what one game can do to a stock price. But here we were, $74 in the after-hours session on EA. Never even got close to there in the regular session on the 6th. It got only down to 78. But it has been straight up for 3 days ever since. And I don't know, it almost feels like upside capitulation. We've got Bank of America coming out here this morning, raising their price target. It's Merrill over at Bank of America, raising the price target up to 110, putting a buy rating on it. Buckingham is downgrading it today, but nobody even pays attention to that right now because all they want to see is buying. And I don't know. I mean, if this thing gets anywhere, this is getting ridiculous. I almost feel like I should just sell it and rebuy it because I feel like it's way overdone. But it's hot right now. You can't argue with it. I feel like if you're buying it here now, though, and Bank of America, I feel like you're way late to the party here. You know, here's a stock that was $74 4 days ago in the after-hours session. It's now $100.50 after a disappointing earnings report. The one game came out and they think everything has changed. Maybe it has, but I almost feel like ringing the register on this one.
Let's see here. You got a pair of highs in the 100 handle, 106 and 120. We have exceeded that. That's actually where we're trading right now.
The pre-market high?
The pre-market high comes in at 101.32.
Man, I feel like this is going to be the day it reverses. So I feel like you're going to have one of those opens where it opens, maybe runs up, and they have that 9:45. John Dodson talks about the move, you know, the reversal moves, 9:45, 10 o'clock. I think EA closes red today. I'm predicting it. You know, I'm talking totally against my book here because I'm still long in the long-term account, but I think it closes red today.
I don't
ever make that many official predictions.
That's
an official prediction, obviously just my opinion, but I think it closes red today.
Okay. All right. Well, we will see. Need to take out that pre-market high at 101.35. To me, I feel like, I'm not going to go with today or tomorrow. Just a longer term. Let's see if this stock can close over $100. It's a huge stock. Yeah. And it hasn't closed over 100 since October 22nd of last year. And that high was 101.36. That's my level. I mean, it closes above that, then, hey, keep on running. If not, I think you'll, on any kind of a wicked pullback, though, you're going to find buyers just because of the upgrade today. And then, shorts who were just licking their chops only 3 days ago. Look,
the shorts have just been killed. Oh. Anybody short this thing. I mean, look at that rip your face off rally from Friday. $85, and it was low, obviously opened at 86, straight up at 97.65. Now it's up another $3. I mean, you're looking at this, and maybe you said, okay, well, if it comes back in, it'll stall out at 90, 91, 92. I even said in the chat, I was like, hey, let's see what it does at 92. Lots of blows through that like nothing. So, I mean, this is what things get hot. They get hot. We know how this market works, and sometimes things can stay hot for a while, but this is a big move in a short period of time off of one game. I just think I'm thinking about ringing the register myself.
Do you own ATVI or?
I own ATVI and EA.
Are you thinking of maybe picking up a little bit more?
No, I don't know because not before the report. Because okay. Activision Blizzard, I believe, is due to report tomorrow after the bell.
Yep.
So here's the issue. Yeah, maybe get a one-day move off it or something. But here's the issue. Is that, we saw what Fortnite did to the other games. Well, if this game is like a Fortnite, that's not good for ATVI or Take-Two. So, and they're going to have to do the same thing, maybe going to this free-to-play model and figuring it all out and, Battle Royale, whatever it is. But, I'm not a gamer, but I'll tell you, it worked for Fortnite, obviously, and it seems to be working for EA immediately here. So they've got to, figure that out. The stock probably is going to disappoint, I think, because you had EA with a big miss, Take-Two with a big miss. Why did Fortnite not hit Activision Blizzard? It's probably going to get a big miss too. So is it all priced in is the question. They already have knocked it down. So if they come out and beat, it's going to rally. But I don't know if they come out with a big miss, it could get hit again. So I don't want to own it out of the report, although I do own it in the long-term portfolio, but I'm not putting on any extra out of the report.
Okay. All right. Let's see who was asking about that.
That was Griffin.
Yeah, Griffin.
I'm scared. I'm scared going into the report, but maybe it's all priced in. It's really a wild card because if they do come out and say anything okay, they probably will rally it because they knocked this down 10% or 12% just on the EA report and the Take-Two report. And Activision Blizzard didn't even say anything. So a lot of it might be priced in, but again, you've had EA, you've had a huge rally in that now. Take-Two has tried to rally it, but Activision Blizzard isn't rallying at all. And I think it's because it's probably a lot of traders nervous. So maybe it's crowded to the short side now. So that's the only thing that would go for you. But I just think, it's set up to miss. So I'm scared to own I'm scared. I'd be scared to own extra shares into the report.
I'm just going to try and I'm not in this nor have any interest in getting in it. So I'm just going to try and look at this and just look at that ugly monthly chart, that green candle last month. But to me, man, maybe I'll look at this stock when it's over 50 bucks. I mean, there's a lot of congestion there, a lot of highs there. Yeah, maybe I'm going to miss out on a 6-7 point move, but if this thing can get back above 50 and hold it, and I'm not just talking about 1, 2, 3, or 4 days, maybe over a week, because that just looks like it's a psychological level. You look like you had a lot of highs, a lot of consolidation. So I might miss out on 6-7 points, but I'll be entering the stock on strength as opposed to just, I'm just picking a bottom here.
That's hard.
Yeah,
you will get lucky sometimes and get the bottom, and those are the ones you remember the most, which is actually a problem because it's not a good strategy. It's just that you remember that the most, and then you do it again and again. But the best trades that I make are not trying to call a bottom because it's difficult to do.
Yeah, so we'll just keep.
And you're buying pain. So long-term investing, a little different story. I'm still going to say long-term investing much different than trading. I'm a contrarian investor and a momentum trader, so that's what's worked for me. But it all depends on time frame. It all depends on how much heat you can take when you're trying to call a bottom. If you think something's dirt cheap and you're throwing it in there in your retirement account, that's what I do. I can take a lot of heat in that because I'm not margined, so I can take heat forever in that thing. And I believe in the company. It's why Activision Blizzard, I'm not dumping it out of my long-term portfolio because I think I'm still a big fan of the gaming stocks. It's way cheap. It's almost half price to where it was back in the summer. I think long-term, I think you're going to be okay in that. Short term, I wouldn't want to own it because you've had the other two miss. So all depends on time frame.
And if you want to, go a little bit more beyond the technical analysis, I mean, they gave you a day. What was that on Wednesday when it went from 92.52? I mean, it had was all over the place, but it traded 31 million shares. And yes, it was a down day. So you could be looking at that, okay, a lot of bulls, a lot of bears traded, a lot of new positions taken. Let's see what happens with that closing price. If you chose to close on that closing price on Thursday, you didn't have much chance of a buy it. You had 80.21 close and a 79.90 low, and actually the low was the opening print there. So wait for a big volume day. If Activision gets a good report or something, has a good volume day to the upside, and that a huge volume day.
It's all going to be on that report. I mean, it's all about Tuesday night and what it says. It's going to move.
Okay.
We had Tesla this morning, so we're sticking with ratings a little bit here because these are some interesting ones here this morning. Tesla is getting upgraded at Canaccord, raising their price target up to $450. The stock is responding well here in the pre-market. We are up 7 points. It seems like every time Tesla gets under $300, it seems to be a buy. And here is the case again. It dipped under it on Friday. We're right back up to 312. This upgrade could kickstart up to that 320 area again. So it's still long-term range bound. I mean, this is one thing when we talk about Tesla a lot. You look at it over the course of the last 5 years, and it had this, from 2014 to 2017, it was really kind of in like a 160 to like 270 range. And then the range has kind of moved up. So it's like from the upper 370 down to 250. Every time it gets down there, it seems to be a buy. Every time it gets up from 370, it seems to be a sell. We're kind of overall right in the middle of it, but just lately, it seems like every time it gets under 300, it seems to be a buy. I still think the story here carries the stock, and I still think that the stock is going to see I think it's going up. I think it's going to see $400 here eventually, just because the story behind it. I think they're believers, and I've seen a lot of bad news come from this, and it's like it just can't get the momentum going to the downside. There's just too many people that believe in the story. So I don't know what it's going to take. Like the short thesis is strong. I mean, it's been strong. You don't know what Musk is going to say next, but they've done so many bad things. Like, and from even Musk's perspective, there's been so much bad news on this, and it still can't go down. When stocks can't go down on bad news all the time, I mean, they basically warned at the beginning of the year, and it bounced back 3 days later. So, I mean, it's difficult to keep playing this from the short side because it doesn't work.
Big level, I'll just give you some targets on the upside. Last week's high came in at 324.24, so that's a nice number. That's a target on the upside. It had another high in the 300 handle last week, 322.44. But if you really want to look for an area where it could get a little silly to the upside here, I believe the day that they cut the workforce, the day prior, they had a high at 327.13. And that is the top of the gap that you see from February or from January 22nd. So above 327.13, I really think you're going to have some short scrambling. You have a big gap area up to 344.15. So it looks like it's raring to go. Not look like you're going to.
What are your thoughts on this story? I mean, you know, we've had obviously Jason Raznick with Benzinga. You know, it's a big likes the company, he's got the car, likes the stock. You know, and he's talked me into it too, and I believe in the story here as well. Well, what's Joel Elconin? Because I already say, you know, I like the story. I don't have the guts to own it. I just can't stomach the stock, so that's why I don't own it. But if you know, I'd like to own it, I just can't stomach it. What are your thoughts?
I have probably said, I don't know how many times and written it down how many times that I'm going to put, you know, a small position on in my IRA account. You obviously, if you go the leaps and you go, you know, with any kind of options, you're killing yourself. You go in with a small lick of the stock, you know, I mean, you're not going to be out there buying 1,000 shares of the stock, but, you know, just get a little piece in there and the 300 and forget about it. And I don't know if today's going to be the day, but not shorting it. And I got to get it in there. Now, I don't know if and I guess the amount that I'm going to be buying, you know, it doesn't make a difference whether you get in at 317, 320 or whatever. Have the position. If it falls back down to the 250, 260 area, I have to reevaluate, either dump it or add to it. You know, just go in there with that first tranche. So that's my plan. And then So
you like the story too.
Yeah.
I mean, valuation. This is why I've never, you know, been able to stomach is the valuation for me, $52 billion. But they're starting to make some money. I mean, you know, at least they made money in the one quarter there. Whether it's going to continue or not, you know, it's maybe still to be determined. But I don't think they're burning cash like they were. So, and maybe not going to be burning cash at all going forward. So that, you know, story. So I just, and the cars are just awesome. I mean, I look at those, you know, like I said, you know, I've sat in them there at Somerset Mall. I love the cars. They're awesome. And I do believe what Jason Raznick says. When you start seeing more of these things on the road, there's going to be more demand for them because people are going to say, that's a cool car, I want to buy that. And they're not crazy expensive. So I like the story, but at the same time, it's $52 billion for a car company. And we know Ford and GM, you look at the market caps of those are actually less, $33 billion for Ford and General Motors. Obviously, market cap is only 54. So General Motors is actually ahead because General Motors had the recent run. But I mean, that's always what's kept me out is, you know, when I compare them to traditional car companies, the valuation is ridiculous here. But then if you think of it as a technology company, you think about different ways, maybe the margins are going to be better. Maybe it can make sense. I mean, we know GM and Ford have razor tight margins. If the margins are going to be okay here, maybe it can make sense.
Another, and this is just a fundamental reason, you know, I just can't get it out of my head that, you know, transportation is going to be the way it is in like 10 and 15 years. I mean, there's going to be, so does that mean Tesla is going to be the one to lead us out to the promised land, or Ford going to come up with some kind of electronic vehicles? I mean, I've stated on the show. I've stated on the show, I don't think in 10 years, and, you know, maybe it'll take my license away from me sooner, but I really think that, you know, we're not going to need two cars. That there's going to be more, you know, more driverless cars on the road, more, you know, easy modes of transportation where you don't have to pay insurance and you don't have to pay for gas, and, you know, just a much different, driving
all
environment.
The dynamics to it are going to change. I mean, you know, you're going to just sit at home and you're going to order your car and it's going to, you know, I need a ride, and your autonomous car is going to show up and drive you over here immediately. I mean, even the way Uber operates, I mean, it's so efficient. I used an Uber on the weekend again, like I use it all the time now, whenever I can. And I mean, it's so much better than a taxi ride. Like, it's usually, you know, you get usually a nicer car you're sitting in. You can track the car coming to get you. You don't have to try to find and fight for a taxi and wave it down. I mean, here it is. I can stand inside someplace warm because it's cold in Detroit, Windsor area until, I see my Ubers outside my door waiting for me. I just walk out and get it. I mean, it's just so convenient.
How old Spencer? How old is your Spencer?
What are you asking?
How old is your son?
How old is your Spencer?
Oh, I saw you talking to Spencer on our show. You're talking about my boy Spencer.
No, yeah.
He's 4.
Okay. I don't think you'll be buying him a car when he's 16.
I don't even need it. It'll all be autonomous. He won't be needing to get his license, I don't think.
No, that's
well. And here's another thing, like the driverless cars are going to change everything. Like my dad is getting older, my mom's getting older, and there was a whole thing. They were going to Florida and they're driving down there, and they didn't feel like driving down there. I mean, in 3-4 years, because they're getting older and they just don't want to drive it. But it's hard to do. In 3-4 years, in 5 years, you get this autonomous car. It's going to be awesome. Press your driverless car button and drives you to Florida. Go to sleep.
I don't think 3 or 4 years.
You don't think so?
No, I think maybe a little longer than that.
Maybe 10 years. 10 years we're going to be there, aren't we? Over under on when we can just press the driverless car button and I just go to sleep until you take me to where my destination is?
Maybe.
Got to be under 10 years.
Maybe.
What's the over under on that?
I said I'm going with your 12, because Spencer's going to be 16. I told you that I bought.
It's going to be awesome for long trips. I just press the button. And
my God! And
I just go to sleep. I go out to my cottage, 5-hour drive. I just press the button. I go to sleep for 5 hours. I wake up. I'm there. It's going to be awesome.
You know what I'm looking forward to most is that when Lisa and I are in a driverless car, there's absolutely no way that she could criticize my driving and how fast I'm going. And me cutting people off, but another earnings.
Criticizing the cars.
Wait,
it's not going fast enough. It's following the speed limit.
I have a couple of thoughts on this note specifically, though. There's a lot.
Tesla note, we really digressed.
The Tesla. That's fine. The Tesla note. So the Tesla's one of those stocks that gets a lot of coverage, honestly. Obviously, and if you're wondering, this morning, okay, here's a note from Canaccord. It's an upgrade. Why this note? Like, what is it about this note specifically that is making the stock go up? What's it up this morning? Now, last I checked, it was
$6.80.
Yeah. So a couple of things I noticed from this note that jump out to me. If you're wondering why people are so interested in this note this morning, from Tesla, one. Canaccord, this is their first. They've had a hold on the stock since they started coverage on it last summer. So whenever you see a company, a shop go from hold to buy for the first time, that's interesting. 2, we tend to see the notes that tend to get the most attention are the ones that start a trend. We have not had an upgrade to Tesla since December, since Jefferies upgraded them to buy in December. Obviously, we've had a lot of new fundamental information come out since then, and no new upgrades since that new fundamental information, since that earnings report came out. We had a bunch of maintains and reiterations, but no upgrades since that earnings report. This is the first one. So that's 2. So this is the first real upgrade from any of the major firms since we had new fundamental data from the earnings report. 3 is the price target is I think it's not a street high, but it's pretty damn close. The street high is 465 from Baird. This is 450, so it's pretty damn up. It's a pretty dramatic price target increase. What they're at 380 or something, and now they're at 450. So it's the 3 reasons. If you're wondering why, of all the notes of all the analysts that cover Tesla, why are we so interested in this one this morning, and why is the stock reacting the way it is? Those are 3 reasons that make this note jump out to me.
I think I would not be fading it at $6.68. I think it could go to 320 today on this note. I think it just kickstarts it. So we'll see. But I hate chasing. I don't like buying a stock up $6.68, and I probably won't trade it because I don't like chasing stocks, just my rule. But I feel like it's kind of late almost. Like I feel like it could be up. I think we could see 320, maybe not today, maybe tomorrow, but I think this could get up there and back to those couple of highs, at least, that we had just from a few days ago. 322 back on the 5th, and then the next day, 324 back on the 6th. I think that's where we could head. So I think you got 12 points here, potentially.
And one other thing, too, is we've had Gene Munster of Loop Ventures on the show. I mean, he looks at Tesla, as a car company, but, he also looks at it as just a pure technology company. What are people going to be doing when their driverless car is taking them down to Florida? You know, they're going to be on the internet. They're going to be grocery shop or buying stuff or planning their next trip or planning.
All going to be technology through the whole.
It's all going to, technology through the whole card. But all right,
another rating. We're sticking with ratings here. This one's interesting.
Sure.
I'm wondering if this is Gordo. Vertical group downgraded to negative at vertical group. Is that Gordo? He's obviously a vertical group. Does he cover Roku?
What? Oh, you didn't say what stock it was.
Yeah, Roku. Just hit.
No.
Roku getting downgraded to negative, which is equivalent to sell. We know Gordon Johnson's always aggressive.
No.
So I'm wondering if that's him.
It's
probably him.
It's not him. He doesn't cover. He covers.
Cover Roku?
No, he covers the solar and steel sectors.
I thought he covered some tech stocks too.
If you count Tesla as a tech stock, then yes. But
yeah, Roku's not in there. So it's not Gordon Johnson. Okay. Anyways, Roku getting downgraded to negative at vertical group here. That just hit my board here just a few minutes ago. It's only down 20 cents here right now. Vertical's not hugely influential, but they still followed. So it's interesting that's only down 7 cents right now.
$45. I mean, that's going to be the level to keep an eye on. 2-day low comes in at 45.01. Your 4-day low, 45.22. So we're still comfortably above that. Below 45, you start to get back a little bit from this rally. And when you see a downgrade too, of course, you like to look at the closing price, and that was right up near the high. So if the street's really going to just blow off this downgrade, they'll take it back up.
Where was it trading before the downgrade happened, before 8 o'clock?
Okay, I will.
I'm assuming we were probably up pretty good because the market's up.
We started the 8.15 bracket with a 49 high.
All right, so we did knock 80-90 cents off this when this downgrade just hit. So it hit mine at 8.20. So when it came across my desk here, so
now it's green.
Yeah, now it's green. So I mean, you've got the market helping it out here a little bit. You do have some strength in tech stocks across the board here a little bit, but downgrade to an equivalent of sell usually does put some pressure on it. So just be cautious here with that one today. It's been an incredible rally for Roku, really from the bottom, $26 up to over $50 just a few days ago. I think you get anywhere near 50, you have a few people, maybe that's, the kind of like, it's come far enough here. And I think I'm more apt to sell it at 50 than buy it at 50.
Do you have a Roku box, or Spencer? Do you use that?
Yes.
I know you have.
What's in your TV? Do you even know? Like, how does it work? Like, I don't even know like how the Roku actually works.
I swear we go through this every time.
I know it's old.
It can.
Sorry, Spencer.
It's fine. It's fine. It can.
You got to explain to us again and again, because I have the 6-second goldfish memory, and I don't. I'm old now and don't get technology either.
I think Spencer has a little button, and like, okay, when Joel and Dennis ask about this, then he just hits the button.
He doesn't have to talk. You can just go to sleep for 2 minutes. It's like his autonomous pre-market prep button. You should come up with that, Spencer.
Yeah, I should. No. It can be a piece of hardware, or it's built into your TV. It's the pipes through which your Netflix is delivered to you. So your Netflix.
Yeah, so I'm wondering, like, I have a smart TV.
Right.
Is that smart TV got Roku in it? Because
you're asking me what your TV has.
No, I don't know. Maybe it does. Maybe I have Roku and I don't even know it.
It would say
TV. I have a smart TV that is automatic. I just press my little smart button.
No, but you would
know.
My
Netflix account comes up.
Then I don't think so, because you would know, because there's a special remote. So you're a no, but it works in the same way.
Okay.
It's the same. Dennis, do you still have those rabbit ears like on your TV? To like for the end.
Change them up. It's like, hey,
I can't get
there.
the game in, and you go there. Yeah, the rabbit ears, or like the antenna outside. Like,
I have an antenna. Actually, it's pretty good on my house. I do actually. It's pretty good. It picks up the height. And actually, the nice thing about when you get something over the air is that it's immediately like it's you don't have the signal where you're going up to the satellite and down. So if I watch like my hockey game over the air, or I watch it on satellite, it's like 5 seconds delayed on the satellite, but on the air, I'm like 5 seconds ahead. It's like almost real time, because you don't have to go up to the satellite and down with the signal. Latency.
You know what? I may upgrade Roku here, because Jay says, Dennis, I am watching your show now through Roku and YouTube app.
Nice.
So we're on Roku. That's amazing.
We're on Roku. Look at this.
Spencer, could you get the numbers for our viewership on Roku, please?
Yeah, sure. I'll work right on that. What other ratings? It's 8:30 now. There was one more, I believe, that we want. Nvidia, right? That was the one, and they're catching a downgrade this morning from Bernstein down to market perform. Price target on Nvidia lowered to 175.
I own it. I'm sticking with it. It's not a huge position for me, but it's up a little above, it's actually below average, but it's almost to a full-size position. So I'm in it. I'm sticking with NVIDIA. I mean, the chips have turned around here. I think it's going to take one upgrade, and this downgrade isn't helping it. We'll see what happens in the report. I mean, it's all going to be about Thursday, too, and what's going to happen going into the report. So Thursday night, I believe, is when NVIDIA is going to report. So Bernstein a little bit gutsy, downgrading ahead of a report. You don't often see analysts do that because they usually want to wait till they get from the information from the quarter to then, figure out whether they think it's going up or down, where they're basically just gambling when you're downgrading ahead of report.
And they warned on this report too, right? I mean, So I mean, who knows?
We have precedents here. Apple did this. And Apple came out with the crappy numbers. They hit it a little bit, and then they bought the hell out of it. So, I mean, we have precedents here. We know the quarter's not going to be great, but if they say anything okay, it's going to be about the guidance going forward the next quarter too, though. So we know this quarter is not going to be great because I've already warned. So it's going to be about the guidance going forward in the next quarter.
It's a slow leak here. We are down 247, but if you look at the 15-minute chart here, I mean, there's a seller, and they're walking it down here, and just about each 15-minute bracket has been lower. So someone's definitely put some pressure on there. I don't know if it's one seller or a group of sellers. 145.60 seems to be attracting buyers at this point. If you go to the daily chart, you have a low at 144.58. So just ahead of the report, I'm using that whole area as a buy zone. I don't think you're going to see 142.58 today. Shorts going into the report that are really trying to decide what to do will probably be using this opportunity as a pullback. But I just don't see the stock just getting absolutely killed today.
Citi also, and thanks, Griffin, for saying it, not a downgrade, but price target cut at Citi, and it's no longer a top pick. So we do have some notes from Citi on NVIDIA here this morning as well. So basically two analysts kind of ganging up on it. That's why NVIDIA is showing some relative weakness here as the market is stronger. Let's go at balances here. Just 2 minutes before our guest, Ian Weiner, is going to be coming on here in a minute. Johnson Johnson, 60,000 to sell. Kind of stands out a bit. Man, they're small. No institutions showing anything here this morning. This is disappointing. Squared nothing. 200 shares only there. Baba, 5,100 to buy. Those are the smallest imbalance I've ever seen. There's no story here from imbalance land.
All right. I'll just say the Square after the downgrade.
It's holding 70.
Yeah, I know.
That's 70. There is buyers at 70 on Square. Yep. So twice, two days, 70, 23, 70, 52, 70, 82. Every time we get down to the 70s, this thing finds buyers. I still believe in the Square story. I still think we're going to be higher here. I don't know if we're going to hit all-time highs here by the end of the year, but I like the story still going forward here, and I kind of want to be long it. It's a valuation issue that for me, that's why I haven't been long. But from a trading perspective, I absolutely am a buyer of pullbacks on Square.
All right. It is 8:34. We're going to take our only break of the day and grab today's guest, Ian Weiner, formerly of Wedbush Securities. He's got a new firm he's at now. He's going to talk to us about that and what his thoughts are on this market. So we'll be right back in a moment here with Mr. Weiner. And welcome back, everyone, to Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick. Now joined by Ian Weiner. Ian, how's it going this morning?
It's going great. Thank you. Thanks for having me.
So last time we had you on, Ian, I don't even know where in the world you were. Maybe you're in America, but probably not. Tell us a little bit about what you've been up to since leaving Wedbush Securities. About, what, a year ago?
We're getting close to a year, yes. My wife and I went and started volunteering around the world. So we started in Southeast Asia, spent about a third of the year there in 2018 in Indonesia, Thailand, and Malaysia, doing a bunch of different activities, teaching kids English and working on elephant sanctuaries and doing some island conservation as well.
And so now you're back. You take a little break. Have you planned out your next excursion with your wife?
We're working on getting to Africa. Hopefully sometime early summer is sort of the plan right now.
All right. So should be a little toasty there, but keep us abreast of your plans on that. Well, you're keeping busy here. You have joined the advisory board of Drexel Hamilton, a veteran-owned and operated investment bank which employs veterans from all branches of the service. So talk about, how that came about, what you're doing there, and how is it working with our veterans?
So, as a veteran myself, I feel it's sort of the utmost responsibility for us to do what we can for those who've served. Drexel,
what branch were you in? What branch were you in?
I was actually in the Army.
Okay.
I went to West Point, and then while I was there, hurt my ears pretty badly, so I was discharged upon graduation. But the Drexel Hamilton happens to be, it's the only firm out there that's actually employs greater than 50% veterans. Their asset manager is the same way, and 30% of their employees are actually disabled as a result of their service, and 100% of the equity is owned by veterans. So I know a few of the people in management who went to West Point with me. They just took over the firm about 9-10 months ago, and now are trying to turn it around. And they asked me, given my 22 years of experience in building businesses, if I could sort of advise them a little bit on what they're going to be doing going forward. So it's a good opportunity for me to, do something that's in line with kind of my core values, help out with some of my skill set, but not get too back involved in things again.
All right. So are you on the management end, or are you trying to use your vast years of knowledge in the market to help navigate these veterans through the? I mean, it's a bull market. I mean, some people could say, we had to retreat. Certain stocks are in bear markets, bull markets. I mean, it's pretty hard to argue that we're still in a long-standing bull market. How are you evaluating the market?
I agree with you. We are in a bull market. I would say that there really are only two things that matter right now, that seem to matter. One is the Fed, and two are the China talks. I will say that what took place with the Fed a couple of weeks ago was the most shocking sort of turnabout I've seen in 22 years. And changed the game, I think, totally for people. So if you were bearish before Powell came out and changed his mind and haven't questioned your thesis, I don't think you're being intellectually honest. That I've never seen anything like that, and certainly calls into question, the independence of the Fed altogether. But it certainly felt like they have kind of made a statement that they're not going to let the market go down. And on the flip side, they're not going to get in the way of a rally.
I mean, that's just dead. If you got the Fed behind you, it's hard to fight it as the shorts. I mean, we saw, the shorts had a great thesis going in December when everybody's getting nervous, and then all of a sudden everything changes. The Fed showed you that they are a lot more market dependent sometimes than they are data dependent, in my opinion. And if, the market's going to go down, we know the Fed's going to have its back. If it's going to go up, it's going to go up. So it's hard to be long-term bearish.
It's very hard. I think that if you want to be long-term bearish, I think the bet you make at this point is that not only will the U.S. growth slow towards recession at some point in 2020, but I think everybody knows that China's growth is not 6.4%. The question is it 2.5 or is it 5.5? And if you're a bear and you think it's 2.5, then even with the Fed, I think it's going to be a big problem.
And you've been on Wall Street, or you were on Wall Street for a long time as the director of securities at Wedbush. And on our show a lot, we talk about ratings changes, and they definitely have a, short-term impact on the market. Some more than others. This is research that institutions, big players are paying for. Just give us your just reaction. I know you're off. I'm not sure if you're under any constraints or whatnot, but how should the average investor, if they're just getting in new to the market, learning about equity, should they pay some attention to analyst ratings, no attention to analyst ratings, or just fade the hell out of them?
Well, yeah, I don't have any constraints, so that's fun.
Okay.
but I would say that the average investor should probably care less about what most of the analysts say on Wall Street. The reason is that they're just driven by different motivations, and they all move stocks. It is shocking to me that people still listen to all these research firms, and even tiny little research firms are able to move stocks. I think that makes the life of a hedge fund manager very difficult because they're marked kind of every day at this point. But as far as an individual investor, it's probably, I think the less time you spend sort of digging into every individual stock and just own an index, the more enjoyable your life's going to be, and you'll probably still outperform.
It's just so difficult. I mean, everybody has an opinion. So yeah, you have lots of research analysts coming out with their opinions all the time, driving the stocks up or down. But then you have a lot of commentators, even on CNBC. I mean, I've seen multiple times where a commentator comes on Fast Money, just talks bullish on a stock, and you'll see it rally 2% just because obviously it's got a big presence and a lot of people are watching CNBC. So there's so many opinions. And then you go to the social media aspect, and everybody's giving their opinions there too. I mean, you can go and find any opinion you want all the time. It's always going to be somebody bullish, somebody bearish on every single stock. How do you just cut out all that noise and just make your own, investment decision?
Well, I think, you really got to tone down your actual sensory input from it all. I mean, it's really active management that suffers as a result of what you guys are talking about. Hedge funds, their investors are constantly calling them and every month checking on performance. So if they see something, they have to react. If they're short and the stock goes up, they have to cover, and vice versa. Right. So that's where people are really getting hurt by, the phenomenon you're talking about, which, clearly makes no sense. Why stocks would move on what somebody would say, on a TV show.
Yeah.
But I think that as far as an individual investor, I think you got to find, a handful of people that you think are really kind of deep thinking and forest through the trees kind of people, and just listen to what they say. But in general, I found, the less that I've paid attention, the better I've done.
Let's just go back and talk about the overall character of the market here. The big sell-off that we had in November, December, they kind of took the FANG and the high PE stocks to the woodshed. You had a little bit more of a turn towards value. Some of the FANG stocks and these tech stocks have rebounded here, but would you characterize this as a little bit more of a healthy rally up this time? Is it, going back into, value stocks and dividend paying stocks? And, you think that trend will continue, or, the public, investing public is just, waiting for that next hot blockchain stock or, new technology stock?
So here's what I thought was the most interesting thing that very few people talked about through all of December. The entire sell-off, money continued to come into passive funds. It never stopped coming into passive funds. So what you saw there was just an active management phenomenon, where active management mutual funds saw redemptions, hedge funds, redemptions, but the money did not go into cash. It went back into index funds. And so the individual investor never really got out of the market. That was sort of an exposure kind of gross reduction that took place amongst hedge funds. So that to me was the most kind of bullish sign, and the reason that it didn't get really any worse. As far as now, it just feels like we're back to that situation we've been in what seems like for, 8-9 years, where there's no alternative. You have rates pretty low. Yeah, people know earnings growth isn't going to be anything this year, but you may get some multiple expansion because you got the Fed behind you again. And so that's what I think people are playing for at this point.
And interestingly enough, on that note, I was reading that U.S. equity funds had in January had their highest inflows in 4 years. So it seems like the average investor was really buying that December dip in January. But do you have any final thoughts here as far as, we talked about there are only two things that really matter are the Fed and this China stuff. Well, the China stuff seems like we're getting closer. We're definitely getting closer to the deadline here, and they're going to meet. We don't know exactly how this will turn out yet, but do you have any opinions on as far as how this could shake out and when?
So I think that clearly we know what the most bullish situation is, which is, everything stops. If they push the date, I think you kind of tread water. If they go up to 25%, the market's going to be off 5 to 8%. That to me is now you're crossing into a line where, again, the Fed is going to have a problem even stopping that. I do think that people continue to have to pay attention to the fact that we have that divided Congress and all these regulations, all the tax cuts, everything that's going on, is just further at risk the more that the Democrats get a say in what's going on. So, I think near term, it feels like if we get any resolution to what's going on here, less up to 25% will probably make new highs in the tape, is my guess.
All right, we have been on the line with Ian Weiner. As you have learned, he is an advisor at Drexel Hamilton. Ian, as always, thanks for the time, and we'll talk to you again later in the year. Have a good one. Yes,
thanks a lot, guys. I appreciate it.
All right, Joel, 847. Anything changing in the S&P?
No, we made a high at 2150 here in the March S&P contract. I mean, I'm not seeing a lot up here till 2731. I've mentioned to you guys the way I like to look at the levels for the S&Ps and stocks as well. You got a 4-day close at 2729.50. You have the high close of the move at 2731. You have Thursday's Globex high right there at 2730. So that, to me, the key, to get back up to that magic 2737.75, the high of the rebound, we got some work to do there at 2730.
I mean, this market is just resilient. We talked about this on Friday when the market was in the red, and I got this one right because I was like, I'm probably going to be looking to buy this dip. And obviously the market did find its footing there around 11:30, and then we started to rally. Now we're back up, and we're almost, to a point where we're getting back all of Friday's losses. Well, and Friday, actually, I think did we end up closing green on Friday?
Yeah, they bought it up.
Just right at the end. It had that really wicked rally right in the last 20 minutes.
You know what? It was a struggle because I had some index shorts, some Bank of America shorts coming into the week. And I really thought it was going to be the old Friday low, end on the low of the week.
You didn't listen to the show. Then you didn't listen to my stuff. I was saying we're buying the dip on Friday. You got to listen to PreMarket Prep, Joel.
I covered my shorts, Dennis. So
you did cover. Well, that's good.
Yeah. No, I didn't hold on. It was just, I really want there was a number that I had that the weekly pivot. And I thought, wow, it really's got to crack 26.80.75. That was last week's number. And it couldn't. And I was just like, I threw in the towel and I just said, you know what? I didn't use it as an opportunity to go long. But it was just like, okay, this puppy's not going down anymore. And it was just a slow stair-step rally. But I did have my first credit call spread go off the board worthless, Dennis.
What'd you have?
It was a small position because I had to try. Canopy Growth.
Oh, you went on a Canopy. Whoa, big mover.
Yeah.
What'd you do? Tell us, set it up and tell us what you did.
Well, I'm sick of getting abused, buying the weekly puts or weekly calls and puts. Yeah. So on Tuesday, we hit a high in the week, and then we came back in by Wednesday. We were in the 48 handle, and I sold a 47.5, 48 credit call spread, and I think I sold it for like 17. Now my risk on that is much.
It's 27.
Is 27, so I hate that.
Or 23, I guess I did the math.
Yeah, 23. So, I'm like, that's not
33. We're still doing the math wrong.
Yeah.
I can't add to 50. I got to go back to grade 1 math.
Yeah. And then I'm like, I'm like, okay, I'm not going to pay the commission to cover this. And, I watched it and obviously going off the board worthless. So that was a small win. And then I'm like, oh, okay. And I started looking at some of the bigger stocks. And when you start seeing 5-point spreads, as opposed to 50-point spreads, increments, then you're talking about a lot more risk. So I haven't ventured one in. I think when we have Nick on this week, I will tell him that I completed my first successful credit call spread, being on the selling end of buying options. It still took a long time, even to the final day of it. It was still holding premium, and then that like the last 3 or 4 hours they just
they start to suck it out.
They suck it right out of it. So it's funny when you're long an option, man, that time premium just evaporates. When you're short an option,
that's selective perception.
Yeah,
that's selective perception.
You short them, you're like, okay, yeah, I'm short. Yeah, this is supposed to decay. Yeah, the alpha, gamma, yeah, whatever. And you're like, you're looking at it and you're like, did I get this right? Did I buy the call spread? And
it's not coming out.
Yeah.
That's just it's a wild stock. They don't take it out till the very end because what if something comes out, news or anything? So, and always remember, I always say, you even at 4 o'clock, you're not always safe because if you get a wild move at 4:10, they can still exercise those options on you. So you get a wild after hours moves. You can always see an option expire. They don't expire right at 4 o'clock. They expire on Friday. And some brokers, IB will let you exercise until I believe 4:30. So check with your broker. But there's always that possibility. Get a quick after hours move 5-10 minutes after the close. That an option that technically was expiring worthless as a Friday close could actually be in the money at 4:10, and you could get exercised. So I always want to be somewhat careful about that.
Did you ever get dinged on something like that, or have you?
No, I've dinged people on that before though. So I used to always play when I was buying options. I'd buy them for a penny. I'd like $3.59. I'd buy for a penny something that was like a nickel out, and then I'd like throw it out there like after hours. So if I was like long the 50s, let's say I was long 50 calls, and stock closed 49.95. I'd buy the option for a penny because they would a lot of times go down to a penny, and I throw out the stock out like 50.10. If somebody short at 50.10. So if somebody bought me after hours at 50.10, I just exercise my call and I make 10 cents. So that person must be like, what is this person? They exercised me. It's in their account the next day. But you can exercise an option that's technically out of the money. You can exercise anything. So if I just shorted at 50.10 and I think, or the stock, or maybe in some cases, like we've seen, news come out and the stock rallies $2-3.
Yep.
It's like you can't buy those options anymore. But if you have those options, use the stock and you exercise those options outside the money and you make the money. So if let's just say hypothetically you had stock XYZ, you had the 50 calls, stock closes at 4 o'clock at 49.95, comes out with news after hours, goes up to 53. Well, I can exercise my call still at IB and go to 4:30. So you can short the stock at 53, exercise my 50 calls and make 3 points. So the person that looks on their account on Monday is going to throw up a little bit thinking, they were safe, and they weren't, because any market maker that's got those is going to realize, those calls still have value here. They can be exercised after hours, and I'm going to jump all over them. So Spinner's saying that doesn't work anymore, but I don't know if that changed in the last 6 months. But I believe if you go to Interactive Brokers, I believe they're exercisable till 4:30. I did it like 6 months ago. So unless it's changed in the last 6 months, I used to always do that back in the day with the options, but this is going back 5. They used to always expire on Saturday, and they changed that so you could go sometimes up till 8 o'clock at night doing that. But now the brokers, they expire on the Friday, so a lot of them exercise up till 4:30. Spinner's telling me that's not the case anymore. So if it changed in the last 6 months, maybe it did, but I think that you can still do it up till
probably
4:30.
different brokers too.
Well, different brokers too. Yeah, it depends on your broker. Some brokers will not allow you to do that. So if your broker doesn't allow you to do it, then you're handcuffed and you can't do it. But I'm going to Google that. But I believe Interactive Brokers lets go till 4:30.
All right, let's go. Let's spend the rest of today's show taking some questions.
Depends on broker. It for sure depends on the broker. DC saying 100% depends on your broker. They don't allow you to exercise after hours. They don't allow you to exercise. So there's nothing you can do about that. It's all broker to broker.
All right, let's spend the next few minutes here taking some questions from the chat. We had a question about Spotify. What do you guys think of SPOT right here hanging out at just around 137-ish?
Rating change on this today? What's the catalyst? Is there anything?
Not that I've seen, no.
Okay, so when do they report?
They already did.
They already did, so we're already
Yeah.
beyond that. Okay, so this is moving up with the market here. This morning market's getting a little less. Spotify's getting some love here. Was this one? I can't remember this report. Did this one get dinged on the report?
It was.
It did.
It was last Wednesday. So
yeah, it was down and buy the dip works again. Here you are, you're almost all the way back up. So you get back to 140. That's where the scene of the crime. So maybe you find a little resistance there, but I don't know. This market's so bull. I'll probably just take that out. And it wasn't. It came out, got hit a little bit in the earnings, puts like a triple bottom in there, down in the low, 128, 129, 130, starting to show light here. I think it got the resistance at 140, but I think you got by the dippers below. So I'm a buyer. I'd be more of a buyer of pullbacks on Spotify.
Okay, and I just want to alert our listeners here. I'm writing down all the stocks that we chatted about. I'm looking at our calls, and we're going to do a little something different today. At 3 o'clock, I'm going to come on solo for the final hour of the market on this same channel. Go over what we got right, what we got wrong. I got an interview for you too there as well. So I'm going to keep track here of all the stocks that we're talking about being asked about in the chat. And then if you want to see what they actually did and how our predictions turned out, or your predictions, tune in between 3 and 4 today. I will go out on a limb here and say on Spotify that I am staying in the bullish camp here. I love the 129 area. You did have a 2-day low at 128.70. You had another all lows 129, 129.87. So I like it. I'm $2 away here. If I was trying to protect some longs, that's where I would be. On the upside, sellers are congregating here right where we're at. 137.35 was your 3-day high. 2 other highs in a 135 handle. If in fact we can clear that, I'm looking for 141. But if you look at this, it's really been 3 pretty quiet days in the same kind of range after the earnings. So consolidation station here. Keep your eyes on the highs and the lows defined by those 3 days.
Another ticker from chat here, Smartsheet, SMAR. Not a name we discuss too frequently on this show, but we can look at any chart. So let's look at Smartsheet here, guys.
SMAN?
AR.
AR. Dennis? Never heard
I
of
just
it.
talking with Spinner. We were just talking about. I just want to go back to this options thing because everybody's giving me heat that you can't do. I did this for years, guys. So I'm just gonna set it up here. It's important. It's not gonna happen. It doesn't, like 90% of the time. Spinner's saying it's not. 99% of the time you're not going to get out on those. But if you're long a whole bunch of, let's just say, hypothetically speaking, you're long a 50 call. Why not? Like this is if you've got the market making capacities to do it and the margin to do it. Why not throw the stock out short of 50 and a quarter? So I throw it out there 50 and a quarter short. So I'm long the call 50. Stock at 4 o'clock is 49.95. Expire is worthless. If I can exercise my call till 4:30, why not throw an order out there 50 and a quarter short, leave it out there till 4:30, and if somebody buys me, well, at 50 and a quarter, I can just turn around and exercise my call and make 25 cents. So I just took a worthless option and actually made money with it. It's just utilizing the option to your best strategy. Is everybody doing that? Can everybody get out at that price? No. But if I get, executed at 50 and a quarter, I'm making a free 25 cents on a worthless option, on a technically worthless option. So I'm just saying there are ways that you can get exercised. And the person who's on the other side of that is going to be scratching their head. Who would have exercised this option? The person that got executed between 4 and 4:30 exercised this option on you. So there's just different dynamics. So don't be shocked if one day you have an option that expires 2 cents out of the money and all of a sudden the stock shows up in your account on Monday. Because sometimes things happen after hours that you're not accounting for. Even if it's one trade, that one person who did that trade can exercise that option, even if it's technically other. Maybe they're going to gamble and say it's going to open at 49.98. I'm not in the business of gambling. If I can get exercised at 50 and a quarter and it's at 50, I can make a free 25 cents. So, I've talked about this strategy before.
Yep.
So
I think maybe one thing, and I definitely, you got it across to me. You own the option before the 4 o'clock close, right? You're in it, so you have the right.
You're in it. It's worthless. So
exactly.
If you're in a worthless option, why not throw it out short? What if I have access to the after hours? Why not do it? How often is that going to happen? Less than 1%. I'm not trying to get everybody scared that their options are going to get expired. This isn't 10% better. This is like 0.1%. But it's like, why not throw an order out there? It doesn't cost me anything to throw an order out there. So, and I've had lots of instances where, I've been, executed, or I've been actually lifted on an offer. I would throw it out there. Like if it went 50.05 bid, I would immediately hit the 50.05, exercise my option, and take the 5 cents. Why not? It's just utilizing the options to the best of your advantage. So, especially from a market making capacity, there's a lot of stuff that goes on that, behind the scenes. There's lots of different ways. You just got to use, if you can exercise till 4:30, it still has value. There still can be some value there if you utilize it in the right way. I mean, you let it expire worthless, you let it expire worthless. But if there's news on a stock after hours, though, that's where you see everybody get exercised. So, that's where, the bigger...
Check with your broker. That would be the first thing to do.
I almost guarantee you, that you can probably still do this. I mean, I did it like a year ago on an option, so at IB. So, unless it changed in the last year and every broker doesn't allow it now, which, maybe they're going to eventually go to that. This was something that was very common 10 years ago. It was just dependent on your broker, though. Does your broker allow you to first exercise an option that is out of the money? Secondly, do they allow you to exercise at 4:35, 5:30? What time is the cutoff? What is the actual cutoff time to exercise that option?
All right, real quick before we go, guys, SMAR. We started at
Okay.
Can we just do that real fast and then we'll wrap up? Joel.
What's that?
SMAR. Smart sheet.
Is this earnings?
No.
What is
This is just a stop from the chat.
I don't follow this company. I don't know nothing about it.
Yep.
Huge run up. Wow. Big January here from $22 to $35. What's this do? What's Smartsheet? I don't even know what this is.
It's a cloud-based employee resources company.
I'll add this one to my list. Just went, looks like IPO back in 28, so a year. It's only been up there a year. I'll add this one to my list. I don't know. Spend is your friend, right?
Yeah.
A lot of green candles.
Okay.
You're chasing it a bit.
10-day winning streak. And as I've stated on the show, nothing can go up more than 8 days in a row. So this is already exceeded that level. Boom. We're trading higher in the pre-market. Really not much to give you here. Will the seller at 36 even prevail? That's the high, right? So need to take out the 36 even. I think that's an all-time high for the issue since the new IPO. So keep an eye on taking out 36 even from the pre-market. If you're a little bit more of a, you're not worried about the intraday action, you're just looking at the closing price. All-time closing high on Friday at 33.26. Thursday's close 33.10. So if you want to protect profits and not try and pick a top, keep an eye on the lower 33. Maybe there's another close at 32.82. So I like it. I like it above 33. Impossible to tell where resistance is in this issue.
All right, that will do it for our show today. Thanks to our guest, Ian Weiner. Thanks to all of you in both of our chats, both on YouTube and premarket.benzinga.com. As Joel mentioned, he will be online from 3 to 4 on Benzinga's YouTube channel in this exact spot, breaking down today's action in the markets. If you missed any part of our show today, catch our podcast. We're on iTunes, SoundCloud, Stitcher, Google Podcasts, and TuneIn. Please remember all the information from our shows for informational purposes only and not meant to be investing advice. Everyone have a good rest of your day, and we will see you this afternoon and tomorrow.